Vivek, some of the latest headlines have to do with Micron and this inventory correction that we see happening in the chips. We saw the big impact on Intel's quarter, but then some variations in the impact on NVIDIA, now on Micron. How clear is it how quickly the chip makers will be able to work through this correction, and how much of an inventory impact we can expect 2 or 3 quarters out?
Thank you, John. So in the last decade, the demand for semiconductors has more than doubled, even though every 3 to 4 years we have had a correction. And usually these cyclical corrections in this kind of long-term secular trend, they tend to be rolling in nature. You start with consumer, then you get into enterprise, then you get into data center, and then you finally finish with auto industrial. And through that process, sell-side estimates get adjusted very aggressively. And then even though the end sales can decline, the stocks can continue to do well. So to answer your question, I think we are in the middle of that period of inventory correction, of estimate adjustments. But by September or October, we think this process will be done. So we are actually very positive on semiconductor stocks heading into the next year. But we are still in the middle of that rolling correction that started with the consumer. And we saw that with Micron, with Intel, with some of the smartphone makers. We saw it with NVIDIA, with consumer graphics. We are hearing about some of that weakness spilling into enterprise and data center, perhaps even into auto and industrial. But we think this is what happens every 3 to 4 years. It should play itself out by September, October. And I think we are actually very bullish on semiconductor stocks heading into the next year.
Okay, so let's talk about the impact of the CHIPS Act. It seems to me like it's nothing near term. We're talking 2, 3, 4 semiconductor cycles out. And is it more on perhaps leading edge process technology or more general process technology? Maybe not to have an impact on overall global pricing and supply, but supply of those critical chips.
Yeah, so you're absolutely right, John, that it doesn't, the end demand for semiconductors is not really going to be impacted by whether we make it in the US or we make it in China or Europe or Japan or Korea. It doesn't change that end demand. It's obviously very good to have a more domestic production of semiconductors in the US and Europe. I'm all for that. But the other 2 goals of the CHIPS Act, which are to do with reducing the reliance on Taiwan, I think that it is too early to make that claim, because there is no manufacturing entity in the US that has manufacturing technology that is the same as TSMC. And TSMC itself is not willing to put its most leading edge technology in the US. So I don't think the CHIPS Act in any near term will be able to reduce our reliance on Taiwan. And then the third aspect of the CHIPS Act, which is to help on the shortage side in auto semiconductors, I think that's also is more process. It's going to take place over the next 3 to 4 quarters. So my view on the CHIPS Act is that, yes, it is an incremental positive. It brings more high-tech manufacturing to the US, but I don't think it's a silver bullet in terms of reducing our reliance on Taiwan anytime soon.